This is the briefing for Monday, January 9th. In last Monday's briefing, I proposed a possible alternative scenario as to what was going on in the stock indices. And I think I quoted back then the fact that I'm basically bearish on this market. I just don't believe the Fed is going to ease up as quickly as the market anticipates the Fed to do that. But then I've been proven wrong in the past. But I did come up with another scenario as I was staring at this chart, and basically that scenario is that this is a weekly downtrend of the spiders. You can see a series of lower highs and lower lows. This, however, is another lower high, and it is basically within trend of this downtrend. But this appears, and this pause here appears to be saying that there's not enough selling pressure for the market to go lower. Therefore, the longer it lingered there, and it's lingered there for about 3 weeks, the longer it lingers there, the higher the probability that traders are going to step in and say there's no selling pressure, let's see if we can break it out and buy it, and they'll start buying and then try and bring in more buyers, making this having the potential for a correction that corrects this. If this is a trend in a downtrend, then this could be a greater degree time and price counter trend rotation, and it appears that it is developing into a 3-step counter trend rotation where this is leg 1, leg 2 is complete, and leg 3 is on the way. Now, based on that, if there's equality between legs 1 and 3, that would put the potential for the spiders to reach the 437 area, and the next upside resistance, as you can see basically from this high, is right at 440. So it would make sense for that to be a possible scenario. Now, I think I said in Monday's briefing last Monday that I basically feel that the higher probability is that we're headed lower before we head higher, but there's a lower probability that we could be headed higher before we head lower once again and take out the October lows. So basically, as I look at this, I have to look at information the market is giving me to help me determine whether my higher probability assessment is incorrect and the lower probability assessment is beginning to become the higher probability assessment. And breaking out of this consolidation was one of the things I was looking at. Now, this is a daily chart of the spiders, the Qs, and the diamonds. Now, you can see this is the rotation that I was talking about on the weekly chart in the spiders, and today we broke out. On Friday's trading, we basically tested that breakout point, and then in today's trading, we broke out, but then retraced completely back down, closing just below that level. The same thing occurred in the Qs. You can see the breakout here in today's trading, and then you can see the rotation all the way back down. Now, this is a pretty big selling tail in both the spiders and the Qs. The same thing occurred in the diamonds representing the industrials, but you can see this is a little bit different chart pattern. This is definitely an uptrend on a daily basis, and this looks as if it's correcting this move here, which would then suggest that the diamonds or the industrials are ready for another move that would take them above this high. Now, the other thing that occurred in today's trading, and I'm not sure you noticed it, but we made a higher high over the previous day's high on weaker breadth, and you can see the divergence right there in the NYSE and the same thing in the NASDAQ or the Qs. So what this leads us to believe, and I really thought that, well, my assessment and analysis last Monday, that to be aware of the lower probability becoming the higher probability was certainly on track. But now that we've retraced back through or testing the upper extreme of this area of rotation, leads me to believe that potentially this could be a false breakout. Now, there's two things that are going on here. One is this is either a false breakout or this is a retest of the breakout, and tomorrow's trading we should see another move back to the upside. So key to what happens tomorrow is going to be these levels right through here, about the 388 level in the spiders. Trading above that would then, and holding above it, would suggest we're going to be trading back up and potentially testing that that 337 to I'm sorry, the 437 to 440 area in the spiders. The same thing in the Qs. Holding above the 270 area would then suggest trading up to and potentially testing the 280 area. And of course, the diamonds, the next level of resistance is going to be this high, which comes in right around 348. Trading below and holding below these levels is going to be very important. That would then suggest a false breakout and rotation through the range and a test of 375 in the spiders, a test of about the 260 level in the Qs, and a test of about the 326, 327 level in the diamonds. So basically, the probability assessment that as of last week was in my, and this is not scientific, was that there was 70% chance we were headed lower, 30% chance we were headed higher. When we broke out today, that suggested that the probabilities had changed, with a greater probability of going higher as opposed to lower. But then on the retracement, that probability assessment came back to about neutral, about 50-50. What happens tomorrow is going to be extremely important. Now, we did reach a point of being extremely overbought in Friday's trading. We worked off some of that overbought condition because of the divergence in market breadth that was weaker in today's trading. But you can see the trend of the overbought and oversold condition of the NASDAQ is trending lower. And we have converged indicator, which suggests the potential for a large move in one direction or the other. The fact that we are basically overbought but not extremely anymore suggests that maybe a slight chance that we're headed lower in tomorrow's trading. That's going to be very, very interesting and a very, very important day in tomorrow's trading. I'll pick this back up tomorrow night, but use a little bit of caution. The most important thing in tomorrow's trading is going to be these resistance or support levels now: 388 in the spiders, 270 in the Qs, and the 335 area in the diamonds. Have a great night, and it's going to be a very interesting day tomorrow.